You made your first investment when you were 11 years old?
In 1942, 80 years ago, I took $114.75, every penny I'd saved, and I bought 3 shares of City Service Preferred. And City Service was a pretty well-known name down then. In fact, in 1920, City Service, I think, was the 4th largest company in the United States in terms of number of shareholders. It was a big company, and so it had a preferred stock that was selling at 38 that had started skipping the dividends during the Depression. So it accumulated dividends on it of $60 or $70. And of course, it was par value of $100 too, and it was selling at 38. And at breakfast one morning, I followed those stocks every day. But then I made my plunge, and I had roughly this amount of money, so I bought 3. I don't remember this precisely, but I think I told my dad in the morning, "Now, let's move, Dad." Pop, I call it. But let's move, Pop.
But you felt the thrill of it then.
I've been reading about it and following it. The whole market. I really had read every book in the Omaha Public Library that was on the stock market.
By 11?
By 11, I'll guarantee you. And some of them twice. I started out reading the ones in my dad's office, and I just loved to read. I read other things too, but I knew more when I was 11 than I know now. I mean, in terms of actual mechanics of the stock. I mean, I don't know what happens when I put an order in now. I mean, it gets in the machinery of the way orders are executed now. I would know if I sat and worked in a trading room for a day or two, but I don't really know the mechanics as well of what happens when an order is processed today as I did when I was 11.
What is it you enjoyed the most about it? Because you don't pick stocks, you pick companies.
Yeah, but when I was 11, I picked stocks. I had the whole wrong idea. I was interested in watching stocks, and I thought stocks were things that went up and down, and I charted them. I read books on technical analysis. I read Edwards and McGee. I think that was the classic then. Hundreds and hundreds of pages. And I read that whole thing over and over again. I read Garfield, Drew, I read everything. And I thought the first 8 years, I thought the important thing was to predict what a stock would do and predict the stock market. And then I read Ben Graham, when I was 19 or 20. And I realized that I was doing it exactly the wrong way. But it didn't hurt that I had that background and everything. And I rejiggered my mind, and when I read the book, The Intelligent Investor, and from that point, I never bought another stock. I bought businesses that happened to be publicly traded, but I became an owner of a business, and I did not care whether a stock went up or down the next day or the next week or the next month or the next year, and I didn't have any idea what it would do. I didn't know what the stock market would do, but I knew businesses. I knew something.
I've asked people about your genius, whatever we describe it.
No, I'm a bright guy who's terribly interested in what he does. So I've spent a lifetime doing it, and I've surrounded myself with people that bring out the best in me. And you don't need to be a genius in what I do. That's the good thing about it. If I went into physics or a whole lot of other subjects, I'd be an also-ran. But I am in a game that you don't need. You probably need 120 points of IQ, but 170 doesn't do any better than 120. It may do worse, probably do worse, but you don't really need brains.
What do you need?
You need the right orientation. 90% of the people, I'm pulling a figure out of the air, but 90% of the people that buy stocks don't think of them the right way. They think about something that they hope goes up next week. And they think about the market as something they hope goes up. And if it's down, they feel worse. I feel better.
And you think about?
Pardon me?
And what do you think?
I think about what the company's going to be worth 10 or 20 years from now.